that happens every single year. And then you had at the same time with, over during the summertime, you started to see, shorts getting trapped in the market, derivative exposure starting to increase. You started to see more money coming in, momentum money was coming in on top of physical buying. You saw capital flows from mining companies just exploding. So all that culminating, just sort of pushing prices higher, forcing almost a sort of gamma squeeze on dealers that were short options going into October. And that actually really heated the market up during that, middle part of October. You just had the options and derivative markets that were just kind of like the tail wagging the dog. It was really pushing prices on an extreme basis.
But I'm curious, just wondering if you're thinking that we're due for a correction. Some say, gold may be forming a new long-term floor on the other side. Is it fairly valued? Is there more upside here as we finish 2025, heading into 2026? What are you anticipating?
If you could tell me what President Trump is going to say tomorrow, I could probably answer that question. It's been a very volatile period, very unpredictable period. I think part of what's driving flows to gold is just this anxiety and uncertainty that is kind of surrounding trade policy and, like you said, deficit spending, debt creation, debt servicing, and then you have this going on around the world. You have Japan that's just printing money. Their currency is falling. I mean, you have it's a global story that I think that's one of the reasons why central banks have been buyers of metals. Not just the last year, but over the last 10 years, they've been picking up the pace and trying to protect their balance sheet, trying to protect against currency debasement, as well as potentially political. Having a neutral reserve asset that's not potentially could be picked at politically by another country. So, and at the same time, the U.S. is trying to come out with stable coins, and their policy is to try and create a digital environment to sort of be the backstop to kind of meet, try to inflate assets, I guess, but try to also initiate or issue more treasuries into the market. Whereas the world, I think, is looking at and saying, hey, listen, there's a lot of treasuries out here. Maybe we want some gold instead of the treasuries as a sort of a mechanism as a neutral reserve asset to protect and maybe collateralize from instead of collateralizing the treasuries. So I think it's a very broad stroke or macro picture that you can
Yeah.
maybe create from here.
Bob, looking back at the last major bull run for gold, I mean, with 2001 to 2011, you saw a huge rally. Do you see similar macro and sentiment trends today? I mean, could we be gearing up for another multi-year rally such as the one we saw in the past?
Yeah, that market, as you just mentioned, I think it was 13 years in a row. Gold went up every single year. Just amazing. And in 2008, it was one of the only assets that was actually up on the year besides T-bills or Treasury notes at the during that fiasco of the financial crisis. So I think the setup is there for this potential push higher. I think a lot of people are trying to pick the top. You're definitely consolidating at the right level here. This pullback that we had from the October highs, you had about an 8 or 10% correction, a little bit more of a correction in silver, which I think eliminated or reduced a lot of the fluff and sort of the late comers coming into the market, especially the traders that use a lot of leverage and margin. They got shaken out, which is very typical. But this idea that silver's been holding, above 48, gold's been holding that 4,000 area. That's
Mhm.
very telling. I mean, if you're short the market, expecting for maybe this year-end, maybe profit-taking event or tax loss selling, that type of thing, there's not much losses to take tax loss selling with in the precious metals area. So you may not see that. And at the end of the day, you may see a reversal higher, even with maybe asset allocators maybe reducing portion sizes of precious metals because they've had such a great run, on a percentage basis. precious metals may be a larger portion of the portfolio that these allocators will maybe tend to allow. So you may see some curtailing there, but that may not happen until after the new year. So it's you're going into that year end with potentially a lot of collateral that could be used on a basis to expand positions.
Yeah. So with gold being the price that it is, there's a lot of FOMO, and they don't want to miss the boat on the profits. Now, with geopolitical tensions rising in the financial system under stress, how should investors be thinking about gold? Should they be looking at it as an inflation hedge, a safe haven, financial fire insurance? Should they chase the upside? I mean, when headlines move the price, what fundamentals or metrics do you watch, and how do you think that we should be thinking about gold?
Yeah, as a long-term investor, what you just mentioned, you could almost say all the above, as a reason to own gold. I think part of the issue with gold ownership in the short run is the volatility. It can,
Mhm.
for people that aren't used to this asset class, you have to remember there's a lot of newcomers coming in. They see the price, it's up 60% on the year, and they're like, I want a piece of that. And they're not used to these big swings that you may not normally see in the stock market is very commonplace in the precious metals, especially in the mining sector. So that can shake people up. But I think if you're owning this metal or this asset class, you're really buying it for the longer term picture of, hey, listen, is the government fixing, or the U.S. government, or any government for that matter, actually fixing their fiscal situation, or is this basically an extended pretend across really all boundaries of trying to figure out how do we maintain our capital servicing costs, at the same time, how do we keep spending money? Because I haven't seen any country really curtail their spending to a large degree, that would actually really strengthen their currency per se. So those are that longer term sort of back of the business card type answer, I guess you could say.
Are you saying that spending beyond our means is not a problem exclusive to the U.S.?
Yeah, some say we're the dirtiest, I guess, the cleanest shirt in the dirty laundry, but the numbers are huge. I mean, there's no question that every country, it's an inflate or die policy, and I think this has turned into almost like economic warfare in a way.
Bob, I want to jump to silver a bit. If we can shift gears, I mean, silver's got its own personality, so I wanted to give silver its own time here. Silver's always been, it's got, you know, qualities, I guess, and has been viewed as both metal, as monetary, and as industrial. And so, uh, it's often it acts as like gold's younger, volatile, younger sibling, is kind of how I've heard it said. Does its cadence alongside gold, just kind of like how it follows gold, but it just seems to be more volatile and moody. Uh, does the fact that its cadence kind of mirrors gold, does that reflect its role as money, or does its volatility indicate that it's becoming more like an industrial metal like copper? How do you see silver?
Yeah, silver, for those that don't know, with your audience, silver's been money longer than gold has, actually. It was used as coinage well before gold was. And so it's been a more of a stable monetary metal for a long time. But you're right, 75% of the usage or demand for silver now is industrial. It's the most reflective metal in the world. It's the most conductive metal in the world. So they're it's antimicrobial. I mean, it has a lot of different properties that can easily be substituted for. And so that's one of the reasons why industry uses it for solar panels and electronics and so forth.
Mhm.
And as this sort of energy, green energy surge, or this idea of data centers and so forth, trying to get more power, the idea of using more solar power to maybe make this more of data centers more of a viable operation, it's helping the silver market. These are the acceleration of the usage of silver in solar panels and so forth, I think has shocked a lot of people over the last 2 or 3, 4 years,
Mhm.
in terms of the exponential sort of rate of usage of silver in those panels. But I think, looking at, the bigger picture, silver is also, and this came out last year, a silver battery, or putting silver into a battery, solid state battery format. The idea that this battery could actually extend the life of the battery, I think, as well as cut down the charging time by half, as well as extend the range of that battery by double. These are things that could be
Mhm.
explosive for a market. And that's where, when you see the silver price moving like it is, yes, everyone looks at the volatility, they look at investment demand, because investment demand has typically been the driver of price, um, because that's sort of the that difference between, industry usage and sort of the, that extra dollar of purchasing that actually would start pressing silver when it was, when its supply was maybe tight,
Mhm.
and so you'd see silver reacting more to investment flows in terms of price action. But when you're looking at industry and you're trying to figure out, okay, the next 2 to 5 years, for example, you're trying to understand, okay, what other applications can silver be used for? And the way technology is moving and growing and
Mhm.
so forth, these are things that will force prices of silver higher if we're in these supply deficits that a lot of people talk about, especially over the last 5 years, where each year there's more usage than there is actual mining supply. Ultimately, that supply is going to come from above ground stocks, and those above ground stocks will only sell at the price that they dictate. And that's one of the reasons why I think platinum has done very well this year as well, is this story that, silver is not just simply this, industrial metal. It has this hybrid type of mentality that actually is during times like these could be a huge benefit, and I think it attracts a wider audience now than maybe it used to be, because in the past, silver has been this sort of, like you said, the redheaded stepchild of the precious metals world, not getting any respect whatsoever. But now I think people are saying, hey, listen, this is, there's some serious use cases for this, as well as, with this push for gold. It just makes sense when you start looking at silver relative to gold, through the gold silver ratio. When's the last time you've ever seen silver peak at an 80-to-1 ratio? I've never seen that. And so people are watching this and they're saying, listen, there's probably more upside in silver than there is in gold at this moment. And just for, your viewers, and full disclosure, I run a hedge fund in precious metals. I'm weighted about 74% silver, 24% roughly in gold, and about 2 to 3% in physical platinum.